everyone. Welcome to Digital Banking Work in Progress, a series where I have a chat with some remarkable individuals who are doing fascinating and often groundbreaking work in digital banking. I'm Seshika, and I've been helping financial institutions on their digital transformation journeys for the last 20 years. And presently, I am the Vice President of Banking and Financial Services at WSO2. And today, I'm very excited to have Chris Skinner on the show with me. Chris is deemed as one of the most influential people in financial technology. He's a best-selling author, advisor to some of the most powerful entities around the world, like the World Bank, the World Economic Forum, the White House, the United Nations, and many others. And more than anything, and very interestingly, Chris is a self-proclaimed troublemaker. So, hi, Chris, and I'm looking forward to understanding some of your daring opinions on the balance between security and customer experience in digital banking, which is a topic that we will be discussing with each other today.
Hi, Seshika. Let's make some trouble.
Let's do it. All right. So, speaking of balancing acts, I first want to actually delve into a different type of balance that you maintain, which is that besides being a best-selling author in financial technology, you are also a children's books author. And your series is called Captain Cake and the Candy Crew. I'm fascinated, Chris, that you are able to kind of seamlessly shift between these two very different subjects and very different audiences as well. So my first question is, how do you maintain this balance? And do you actually find anything common between these two very different areas?
Well, I've actually written a book about fintech for kids, which you can download for free from my website. Okay. But basically, I sat down during the pandemic and was reading to my children who were 4 years old when the pandemic started, and got fed up telling them the same stories every night. So I started making up stories about Captain Cake and the Candy Crew, which is Lieutenant Chocolate, Sergeant Jelly, and Private Potato. Private Potato being the most important member of the crew because she's the only one who can maintain the ship and keep them in space. So it's about diversity, loyalty, friendship, teamwork, and it's really good for kids 3 to 9 years old. To sweetly go where no sweet has gone before.
Well, I guess there are, lots of common areas, like even in the world of business. It's all about teamwork, friendship, isn't it?
Yeah, it's the lessons of working together.
Yeah,
which is the most important thing.
Yeah, that's right. All right, so moving on to the other balance that I was talking about between customer experience and the boring one, really. Your last book, no, not your last book, one of your books, Doing Digital, it's actually a compilation of lessons from leaders in the banking world. And in particular, you interview leadership members from JP Morgan Chase, BBVA, ING, DBS, and CMB, which is China Merchant Bank, to really understand how they're digitally transforming their banks. And these banks are particularly well known for doing digital transformation very well, and as a result, can provide some exceptional customer experiences. So I am curious to understand, Chris, how you see these banks addressing authentication specifically within that umbrella of security in a way that they are able to still maintain a great balance between customer experience and security. Do they maintain that balance or don't they? And I just want to know your thoughts around it.
Yeah, I mean, the book and the interviews didn't focus specifically on customer security, but it does obviously come into the equation. Mm-hmm. And to be honest, what the book ended up focusing upon is the customer experience and customer journey. And when you think about the customer journey, specifically when we look at onboarding, for example, with Know Your Client and security and authentication, and verification. A lot of banks do it really badly because it involves so much application, and in many banks, even now, an awful lot of documentation, which is kind of ridiculous in a digital age. So what these banks were saying is that they're trying to work out how they can onboard customers in the fastest, easiest, and most seamless way. And the challenge is, can you do that with the right compliance regulatory structure? So, for example, there's quite a few neobanks, challenger banks that onboard customers incredibly fast, within a few minutes, and then quite a lot of them actually have been taken to task by the regulatory authorities, saying you didn't do it correctly. So it's a challenge, and we're getting better in that these days you can use biometric authentication, facial recognition, and other services digitally to make it simpler. But the end of the day is that I would say 75% of traditional banks are still reliant upon their traditional structures of you come into a branch, you have to fill in a form, versus 25% who actually can do this fast with security and regulatory compliance.
So that's fascinating, Chris. It's interesting that you should talk about regulatory pressures and how banks kind of need to kind of exist within that framework and still provide better experiences to customers. Now, when I look at it, how I see it is that even within the regulatory framework, some banks are doing very well at this. And I concur about your comment about challenger banks specifically doing this very well. And many of them have actually done that without being caught on, violating any regulatory rules or such. So how do you think what are the challenges that are faced by majority of the banks? Now, when we talk about the banks in your book, specifically doing digital, these are some of the banks that have, the biggest technology budgets available to them, some really strong skill sets in-house, as well as the right attitude towards technology within banking. But I would say these five banks probably represent less than 1% of, the global banks. So how do you think this impacts the rest of the banks, the day-to-day banks, and what do they specifically find challenging? And what are some ways that you have seen them trying to face that challenge and still offer a good experience to customers?
Well, I mean, the majority of banks are dealing with an awful lot of challenges. And you've got to bear in mind it's like spinning plates. So one plate is regulation, another plate is digitalization, but there's also trying to create growth and open more accounts and compete in the marketplace, create better branding and marketing, customer experience, onboarding. There's so many aspects to banking. I call it the Rubik's Cube. So when you think of a Rubik's Cube, you understand the complexity, obviously, of the cube. But you're dealing with geography, distribution, customer demographics and focus, and marketing and service, experience, technology, the list goes on. And that's the reason why an awful lot of banks get it wrong, to be honest, because they don't understand that complexity and haven't got the right C-suite team to deal with that complexity. And one of the interesting things when I did the book Doing Digital is meeting so many banks. And I would say that what distinguishes them, particularly DBS, BBVA, and China Merchants Bank was that when I met their C-suite team, over half of the team had a background in telecommunications and technology. And that really makes a difference because they really understand it. You know, JP Morgan, and I just blogged about this the other day, is driven by Jamie Dimon, who's the CEO and chairman. But he's always, Jamie Dimon had this vision around technology driving banking. And so that's the reason why JP Morgan is today the world's leading bank. It wasn't 20 years ago.
To a point where I think that the way Jamie runs JP Morgan is more like a software company. I mean, they do their banking very well, but they have the same attitude and the same agility like a software company almost.
Yeah, but there's an argument in that space, which is, you know, many banks say we're a technology company with a banking license. And I argue, no, you're not a technology company. You are a bank with a technology focus. I think Deutsche Bank summarized it quite well, which is banking is what we do and technology is how we do it.
Yes.
And the criticality around this point is banking is not a frivolous thing. It's actually a very sort of important part of our lives that has to be secure, reliable, resilient, and trusted. And that's what the banking license is all about. There's a critical tie between government, economy, and banks and society, which is not like Meta, Facebook, or Google, which is, you know, if they go wrong, you don't lose anything. Whereas if a bank goes wrong, you lose everything.
And I remember a comment that you made a while ago on a discussion with us, I think, where, you know, we were talking about Apple Pay and, you know, Google Pay and, you know, Apple Wallet and all of these technology companies doing banking. And I think one of your comments that I really remember is that, you know, you lose money or your transaction goes wrong, what's the number you call? So I think that summarized very well how serious, you know, getting a banking license is and also operating as a bank. And I think that's one of the reasons why we've seen in our business how banks are kind of sometimes nervous to kind of change things to improve customer experience with a fear that they will violate regulatory compliance, or something could go wrong. But essentially, I also feel that if technology can enable banks to give them facilities and features that help them to make use of these large amounts of data that are generated and gathered about the customer for these specific, things like authentication, things like improving customer experience, understanding the customer much better, and personalization, it can really kind of find a nice balance again between regulation and innovation. Because sometimes we feel that those two are also in a bit of a seesaw. And our experience has been that when we introduce technology, that technology has to help banks to innovate within that regulatory framework.
Yeah, I mean, there was a major illumination that I had in one meeting with a bank, and the CIO had presented to the board of the bank the idea of moving to cloud. This is years ago, and the C-suite of the bank just said, no, there's no way that we can do this because the regulator wouldn't approve. Come back in 6 months and present another plan. So 6 months later, the CIO came back with the same plan. And they said, well, what are you doing? You know, this is ridiculous. We told you the regulator wouldn't approve of this. He said, funny you to say this, because I've got the head of the regulator here. He's approved it. And the illumination and the lesson is too often bankers use the fear of regulation and compliance to avoid making decisions about technology or avoid making decisions about their business. You know, take it to the regulator, ask them, talk to them, involve them, and you can work out solutions. And that's the wonderful thing actually now about things like the regulatory sandboxes that we see around the world. That we can grow ideas collaboratively, cooperatively, and include startups, technology companies in the process of creating innovation, because regulation shouldn't stop innovation, it should encourage it.
I agree. And I think regulators have done well in the recent past, especially, I mean, with the introduction of PSD2 in Europe and how that kind of sent a wave around open banking to the rest of the world. And in that, I mean, I was intimately involved in open banking implementations. And, I saw how I saw the flip side, that you're talking about as well, where the regulators were kind of pushing the banks to innovate, and the banks were kind of holding back. Because obviously, I mean, there's over the years, I feel that, banks being the custodians of people's money and their financial data have over the years built these fortresses around them and a certain amount of nervousness about changing things. And sometimes it takes a regulator to kind of kick someone in the rear to kind of, say this no longer can be used as an excuse. So speaking of that, we talk about, and I've been writing about it in the recent past about behavioral authentication. And when I say behavioral authentication, I don't limit myself to behavioral biometrics, but behavioral authentication about, the behavior of the customer as a whole. I mean, in addition to biometrics, about, how they transact, what times do they transact, what type of transactions do they do, and kind of using those as part of verification, so that there's a way that banks can kind of look at this balance in a different way, without looking at it as a balance, to kind of look at it as a virtuous cycle, where you capture all of this data and you actually use that data to do half of the authentication or half of the verification about whether this is typical for the customer, and then interrupt the customer with an authentication request only if there's a significant deviation from what's happening online, as opposed to the customer profile that the bank has historically created for the customer. We worked with a few banks to kind of make that work, and we've seen how much that has improved the customer experience, because, simply you're interrupting the customer much less. What are your thoughts around, this type of data-driven authentication as opposed to user-driven authentication? We are constantly asking the user to provide, a thumbprint, or, look this way and smile. Or look at their phone, or some sort of interruption.
Well, I mean, it's obvious that banking needs to have security, and so you need to have a secure sign-on of some form. And it's interesting because going back, half a century, when the bank card was introduced for the ATM, there was a big debate around PIN numbers. And the fact that originally the idea was there was going to be 6 numbers, and actually the inventor of the ATM's wife said, no, I don't think we can remember 6 numbers, so it should be 4. So now we're at the stage where we have huge complexity of everything online, with using passwords everywhere, most often stored in our browser, so we don't have to remember them. And that, usernames and passwords, I said for a long time, especially as they were invented over half a century ago, are not secure. They're quite ridiculous, to be honest.
Yes.
So, many years ago, I worked for NCR, the ATM company, and we created a ATM with the recognition of the eye, iris recognition.
Yeah.
It didn't work very well, to be honest, but now we have that in borders and border entry into many countries, where it has a recognition of eyeballs or facial recognition. And the layers and layers of security are improving all the time. But the whole reason is that the criminals obviously want to get the money. And where is the money? It used to be in bank branches, so you go to a bank branch with a gun. Now it's online, so you go online with a digital gun. And how do you protect against the digital criminal? And the answer is with more and more layers. And to your point, the problem is that most banks have approached this by saying, so, okay, you need one-time passwords and authentications, and you have to open an app or stick your card into a token and, enter your PIN and password and one-time password and more. It's so awful. It's terrible for the customer. And I think the whole idea of a data-driven behavioral authentication, which I know you're promoting, makes sense. In fact, going back 20 years, there was this idea that we could use keyboard authentication by the way you type. And the weight of your fingers on the keyboard. It's behavioral, and it can recognize, therefore, whether it's really you. I think those things are far better because it provides a great customer experience that's seamless, rather than some terrible password gateway authentication that means that the customer has no idea what's going on.
And also when the fun thing is that when the verification is in the background using all of these typing DNA and all of these data driven authentication factors, you can authenticate much more and much more frequently than in the user driven side, because then you have to be very careful about the number of times you interrupt the customer, whereas in the data driven world you can do it anytime.
I had an old idea, which is my joke in a presentation, that we should use DNA to authenticate, because then I can spit on my bank.
That's a good one.
Gotcha.
All right, Chris. I mean, that was a very interesting chat with you around all things authentication and customer experience. And before we wrap up, I want to have a quick fire round where I will tell you a word, and you must tell me the first thing that comes to your mind. All right, it can be a sentence, it can be a word, it's fine, but it's just very quickly the first thing that comes to your mind. Are you ready? Okay.
Go for it.
All right, the first one, ChatGPT.
Intelligent, but undermines my business of blogging.
Second one, open banking.
Fantastic, as long as it's secure.
Okay. The next one is embedded finance.
I hate the word embedded, so I prefer invisible.
Okay. Yeah. Okay. And the last one is socks.
Socks?
Yes, socks.
I don't wear any.
Neither do I. All right. Chris, it was wonderful to have you on my show. Thank you for participating, and I hope you had as much fun as I did. And to all the viewers, I hope this conversation was interesting to you, and look forward to seeing you on another episode with someone equally interesting as Chris. Thanks, everyone. Bye-bye.